this week, but we are live here in the beautiful Zoom Brady Bunch panel. Good morning. Happy
And
Friday.
we're recording, and we got Dennis.
Yes. We're recording. Wait, where's Dennis?
He's there.
Oh, I didn't see him come in there yet. We got the
He's,
Dennis stretch. Perfect. All right. Now we can begin. Good morning, everybody. Sorry about the Facebook troubles, but yeah, it's just go live is just not happening on Facebook today. So, and it may be that I have to go back through some settings because, like I said, I had reformatted my hard drive last weekend. Amazing how quickly you can recover from that these days.
Oh, yeah. I mean,
because everything's in the cloud. I just had to grab a few files, stick
not
them
even
on.
hours. We probably did it in a whole hour.
Yeah, just about. I mean, there's a few things I have to reinstall, like Camtasia and Snagit, but it's really easy to recover even those because all these services you just log in, they have a record of your license. It's very easy to get it sort of authenticated or whatever you want to call it.
I keep a folder in my Google Drive, so the Google Drive file stream is the first thing I load up, with all of the install files for the programs that I use, and so that way I don't always use those files because oftentimes they're outdated, but at least it reminds me what are the apps that I was using before I formatted the computer.
Right. Well, actually what I did was I went into ClickUp and I created a task with subtasks making a list of all the things I needed to make sure I remembered to reinstall. Because one thing I hate doing is realizing the minute I need the program that I need to reinstall it.
Yeah.
So I project managed the whole thing. Anyway, we're here to talk about how to get your book's tax return ready. It's too bad Fred Stein's not here because this was really his idea. But I didn't do a very good job of letting him know we were doing this today. So I'll have to let him know after the fact.
He should just always be here.
I know.
That's how we fix that.
So, Matthew, if I make you host so that you could go live, I lose my hosting privileges, which will make it difficult for me to do the presentation. So it's no big deal. Anyway, so how to get the tax return, how to get the book's tax return ready. One of the things, and I think we've discussed this in 97 and up, I feel like I remember this conversation, is that if you're maybe I had it with Greg. This sounds like one of the conversations I might have had with Greg at some point, that if you're managing the bookkeeping for the client every month, then year end should be no matter other than just getting December wrapped up, right? If all the other months are done, that should really be all of what year-end amounts to. Maybe a couple of extra things to look over, but by and large, it should just be a matter of wrapping up December, right? And but again, that's a big assumption that we're starting with, the month of January and just getting and keeping everything nice and clean. Now, one of the first things I like to do, especially with a brand new client that I'm taking over, but even with existing clients, even with clients that I've been working on, and as much as I might think I'm doing an amazing job of keeping everything up to date, I still like to check that the books agree to the tax return, right? Because it pains me to admit it, but I make mistakes sometimes, at least once a day, right? So as much as I think I'm an amazing bookkeeper, I still don't assume that I don't make any mistakes, and I still do that check of comparing the books to the tax return, because lo and behold, once in a while I'll find that, oops, I changed something from the prior period. And I know we can lock the books. I often don't do it, though, because I find that more often than not it creates friction where I don't want it when I lock the books up. So I often don't lock the books, even though, I know we can, and a lot of people are going to say, you should. Just invariably, whenever I lock the books up, at some point, it seems like as soon as I do it, somebody needs me to unlock the books so that they can do something that they legitimately need to do that isn't going to screw up the books, but they need access to something, or whatever it is. So I try to, in the bigger picture, work with people whom I can trust to be able to treat like adults and say, don't change stuff before the prior period. And that goes for the bookkeepers whom I employ, as well as the clients whom I work with. And, I know that, the story, give somebody enough rope, they're going to hang themselves with it. And sometimes I do that, but at least I know that I have a good process for correcting and fixing these things. So the first thing, and I think probably most of you, if not all of you here, are familiar with this, but the first thing I like to do is go through this process here. And this is my famous trial balance adjustment template, right? And this is sold in my online store, but anybody who's in 97 and up has access to it included. And I also included it in the recent Bulletproof Bookkeeping bonus launch that I did, because this is going to be a critical piece of what we're going to be looking at in the 6-week coaching period that's coming. It's, we're going to do, one of the lessons is going to be devoted largely to this and some other things surrounding this. It's one of the most important things I think we need to do as soon as we get a new client. As soon as they've signed on the dotted line, so to speak, and paid us for our first month, first thing we should do is get the books into agreement with the tax return. And there's a little YouTube video here with the link you can click on to watch how this template works. You'll put in the year-end date that you're working on here. It's configured dynamically to put in the most recent year end, so you can see it's automatically figuring December 31st of 2019 is what we're trying to adjust to. But obviously you can go in and override that with whatever date is appropriate, right? And then we click next, and here's the template. And I'm not going to go through the process showing you how to use it, because you can watch the video to see that. But I just want to mention here for today's purpose that this to me is one of the most important things that you'll want to do to get the book's tax return ready. Because if you haven't done it yet, let's say by the end of 2020, before you go to turn in the 2020 books to whomever is going to be preparing the taxes, you're going to want to do this for the December 31, 19, tax year end. And I'm assuming calendar year end. Obviously, if it's a fiscal year, you do it accordingly. But the point is, we want to do this because one of the first, and the reason I created this template, it came, it's what's the expression? Necessity is the mother of invention, right? So years ago, when I was a young whippersnapper and I was working at a CPA firm, and usually they threw this job on me, is every time they got a new client in the door, I had to sit there and go through the tax return line by line and then figure out and run the trial balance in QuickBooks and see how they compare. And it was taking me like hours to go through it all and prepare this. And I just said, this is the classic, a predecessor to designing something or inventing something, because I found myself saying there has to be a better way. Right? And that's like the classic. As soon as you find yourself saying there has to be a better way, assume that there is and start working on it or looking for it, right? A lot of you, when you get to that moment where you say there has to be a better way, you start looking for the solution. And if you can't find the solution, then create it, because that's what I did here. And it took me, we hesitate on these things, I think, because we think, oh, but it's going to take so much time to create. But we have to remember in those moments to think about the time we're going to save in the long run, right? It's worth it. Not to mention, this template, frankly, has made me pretty good money, especially lately. I've been getting a lot of sales on the website. It's sold for like $25, which is nothing, right? But those sales come in and they help. They make a difference. So I encourage you to think about your own versions of these things, or make your own trial balance adjustment template. Have at it. But because the tricky part, and I'll show you this, I'll go back to the screen in a minute and I'll show you this. The tricky part is writing the formulas to calculate the debits and credits. And I'll explain why this was so challenging. It's not as simple as you might think. But the bottom line was, I said, I need a process where I can take this trial balance report I'm running in QuickBooks, drop it into a spreadsheet, and then I need to be able to get the data from the tax return and line it up. And then I need something that's going to calculate whether to get from what's in the trial balance to what's on the tax return, account by account. Do I need a debit or do I need a credit, right? What am I going from and what am I going to, right? If I'm looking at a bank balance and let's say the bank account was overdrawn according to the tax return, but the books have a debit balance of, $20,000 or whatever it is, then in order to get from a $20,000 debit to an overdraft of 10, I need a $30,000 credit, right? So I needed something that could dynamically figure out which side to put the entry on to get me from trial balance to tax return. Okay, so in order to do that, and I'll tip my hand, I'll show you my magic trick secrets. I had to build a very deep nested conditional formula, a deep if-then that tests every possible scenario in the debit column. Because I have to see, am I going to land on the adjustment part of it, which is here? Am I going to land in the debit or the credit, right? If I'm going from debit to debit, right, and the debit is increasing, then I need a debit to increase that debit. But if I'm going from debit to debit and the debit balance is decreasing, then I'm going to need a credit. So you can see the formula here. It's just testing every possible scenario. And trust me, this didn't take a minute to write. This took like probably a collective hours of sitting there, writing the formula, thinking I had it, testing it, figuring out a scenario in which it crashed and didn't work the right way, and having to, sometimes start completely over from scratch. And then, so it was almost like coding an application in some respects, where I just had to keep testing it, try to break it. If it broke, I had to fix it. And ultimately I got it perfect, so that if I'm starting with a debit of 20,000, right? And immediately it goes to, okay, well, we're trying to zero it out. Why? Because there's nothing here on the tax return side yet. So if I'm trying to get from a debit of 20,000 to an overdraft or a credit of 10, I put that here on the tax return side, and then it knows it's 30,000. If on the other hand, I really had 30,000, debit balance or positive in the bank because I had 10,000 more according to the tax return. See, so it just figures it out. And that alone, just having a process like this, but especially being able to take in a few clicks, export the trial balance report, paste it in here, get all the numbers lined up. The account names are going to pull over by formula, right? So, or the account names, I mean, as soon as the account name comes in here on the left from the trial balance, it's going to put that in here. And then you have to bear in mind, and this is a lot of what the video explains in terms of teaching you how to use the template. You're not going to go bank account by bank account. The tax return balance sheet only has one line item for the total cash. So you're just going to use the total, and you're going to just pick a bank account, usually the most active one, the one with the biggest balance, and that's the one whose balance you're going to adjust. You're also going to reverse at least that portion of the adjustment on the next day, because if there's a difference in the bank account balance, it's just a timing difference, assuming, of course, that the bank account is properly reconciled in QuickBooks. Then what that usually indicates is that, and this is what I've seen a lot, is whoever prepared the taxes went off the bank statement probably for the balance instead of relying on the QuickBooks account registers. And they added those up, which of course doesn't take into account uncleared checks, right? So usually, what most often you're going to see when you're adjusting a bank balance is QuickBooks has a lower balance than what the tax return said, because QuickBooks is considering the uncleared checks at this point, right? So that's just a temporary difference. You're going to reverse that, because ultimately you need QuickBooks to sort of rely on the actual reconciled balance, not what the tax return said. So there's going to, after you prepare and post this entry, you're going to hit that reverse button in the journal entry screen, and you're going to eliminate the lines that don't need to get reversed, right? Some of them are going to be permanent differences. You're updating depreciation expense that maybe never got recorded and other things, so you're not going to reverse those. You're just going to reverse the pieces of it that are sort of temporary, right? And then when you do that reversal, you're going to often wind up with a plug. And remember, if we're posting the original entry on December 31st, 2019, the reversal is going to hit on January 1st, right? And so the question becomes, if I have a plug to balance those reversals, what account do I hit? I used to hit retained earnings, but that drove CPAs and enrolled agents crazy, right? Because one of the whole reasons for this was that the first thing the tax preparing professionals are going to do when they get the set of books that you turn over to them to prepare the taxes is they're going to reconcile retained earnings. They're going to look at the retained earnings from the last tax return that they filed and test, does that compare with what QuickBooks says in terms of the total equity number on the balance sheet? And 9.9 times out of 10, it does not agree, because either things got posted directly to retained earnings or other changes were made that affected the prior period that threw it off, right? So what I learned to do, instead of posting anything to retained earnings ever, was to create an account that I classify as other expenses on the P&L, and I call it, quite literally, prior period adjustments, right? And I stick it there because what it does is it pushes it to the very bottom of the P&L, which keeps it out of the way of the operating profits of the company, because it has nothing to do with the operating profits. This way I can still properly analyze the business operations of that company for that year without this kind of skewing that number, because I can see at the bottom of the P&L the net income before the other income and expenses, and then I can see the impact of these prior period adjustments. So it makes a huge difference in terms of A, not messing up retained earnings, and B, making it really clear to any readers of the financial statements what's going on. We had an issue, something got changed that affected a prior period, so I'm quite literally calling it prior period adjustments. And then, of course, when QuickBooks posts its proper closing entry, the final net income number, it will get closed out to retained earnings. So eventually it lands there, but it lands there, it gets there the right way, right? It gets there through the right path, so to speak. And what I love about that also is, as a result of this process, I've also developed the sort of philosophy about retained earnings that nothing ever touches retained earnings except for that one closing entry every year. Because what that does for me is it tells me when I look at retained earnings on the balance sheet, and if I ever want to drill into the details of that, I have a very pure retained earnings account that only reflects the cumulative profits and losses year over year for that company. It keeps it nice and pure and clean, and I like that. I like nice and pure and clean. To me, that's a bulletproof retained earnings account when I have
Have
it.
you considered going back and updating your video or removing it from YouTube, the one that suggests that the proper closing is to close out the
No, because I realize what happened with that video and what happens with a lot of things, and I've learned to be a little more careful about this, is things get taken out of context, and maybe I didn't do a good job of providing that context in that video. I know the one you're referring to, but when people have brought that up and asked me about it more recently, I encourage them to read the comments in that video, because there's a lot of really good discussion on that video that provides the clarity. The reason I posted that video at all was because somebody asked me, and the proper context would have been, I don't recommend doing this, but if you feel the need to close out the accounts, then this is what you can do. And I that's where I sort of failed on that video, is I didn't properly deliver that context, but it did get delivered very clearly in the comments. So I always tell people, just read the comments, and then follow-up comments even more recently as people have continued to post comments on that video. I've made it clear that I don't actually recommend doing this. It's just, this is how you can do it if you insist on doing it. Because there's nothing.
Change the title?
I could change the title. I have to think about
read
that.
the comments first, or at least the description first.
Yeah, not
I
recommended. See comments.
This,
Right. This is against medical advice.
Right.
So anyway, that's the moral of that story, though, is I prefer these days more than ever to keep the retained earnings account very pure and clean, right? There's no reason to ever post anything directly to retained earnings. Even opening balance equity, I get the need for it, but I would rather show that as sort of a contribution or distribution, right? In effect, if I'm transferring a bank account balance onto the books, where I would normally want to put that in opening balance equity, show it as a contribution. If I'm putting a liability account on the books, a liability balance, show that as a distribution. In effect, that's what it is, right? Rather than using opening balance equity. A lot of people don't like opening balance equity because it tends to become a dumping ground for stuff, where people kind of like suspense, where people just put stuff in there when they don't know where else to put it. So that's another thing I like to do more recently, although I'm not totally against opening balance equity, again, as long as it's used in the proper way. I've got an account that was not on the company books. Maybe it's a credit card that was personal in nature, but I've decided to make it exclusive for the business, so I'm going to transfer the balance onto the books and use it accordingly. It's still not bulletproof, right? Because ideally that credit card should be in the name of the business, but it's, from what I understand, and Josh, correct me if I'm wrong here, as long as I can ultimately show that it's only used for the business, I'm sort of protected from the whole commingling question, and then worst case scenario, if there happens to be a personal charge on that, I'll show that charge as kind of a distribution or something. Again, I know it's not ideally bulletproof that way, but I believe it's okay. It will hold up in an audit as long as you can substantially demonstrate that this card is only being used for the business and I'm not using my business as a check register. Josh, right or wrong?
What are you saying about commingling business?
So I have a personal credit card, and I need a credit card for the business. Maybe the business is too new. I can't get approved for a credit card, or I want the points, whatever the reason is that business owners give us. So we say to the client, look, client, fine, use the personal card for the business, but use it only for the business. We'll transfer the balance onto the books. The business will pay it. So that beginning balance I'm going to transfer would go to maybe opening balance equity, or since, like I said a minute ago, I'm transferring a liability onto the books, I might call that a distribution, because in effect, the company's now going to pay off, a balance that was personal in nature. But then going forward, it's only being used for the business.
Yeah, that's how I do handle it the same way. It's not technically correct, but
yeah. But it's not, you won't get totally shot down in an audit. You'll just have to explain it and prove it. So
prove the expenses and the receipts. So
right. So I think one of the critical components, going back to the bigger picture question here of how to get the books tax return ready, is exactly this process of making sure the books agree to the tax return, right, to the last one that was filed. Because if you've got that starting point properly in place, then whatever happened this year just kind of rolls forward, and they're going to look at that reconciliation that the CPAs and enrolled agents are going to do is they're going to look at beginning retained earnings, right, plus or minus net income from this year should equal ending retained earnings, right? And if they can't get that reconciliation done, their tax return, some of them will just do the work and bill the client for it. And they don't necessarily explain that to the client. They just do it because they don't have time. They just have to get the books ready and do the tax return. Others will actually others will kick the books back out and say retained earnings don't tie. And still others, I'm guessing, just push it through some way, shape, or form and don't even bother to tell the client that there's a really critical problem inherent in your books that needs to be fixed. Because I think, again, and I used to fault the CPAs and enrolled agents. I don't anymore, because I've come to understand a lot better that these guys like Josh are up to their eyeballs in this stuff. They don't necessarily have time unless the clients are willing to pay some extra money for that extra attention. They don't have time to point out these problems. They just need to get the returns done. And so they'll do what they have to do on their end. They'll keep a work paper that kind of accounts for the book to tax differences, so that next year when they review the books, they'll go back to that work paper. They'll say, oh yeah, that's right. This one's a cluster. You know what? I'll do what I have to do on my end, just keeping track in my own work papers because ultimately the tax preparing professional needs to know that they can prove to the IRS and to the state or whomever that that their numbers on the tax return were sound, right? And so that's what a lot of them are going to do. Like I said, simply because they don't have the time to chase down every client with every set of books whose retained earnings don't tie.
You're 100% correct. I have work papers for certain clients, and I don't have time to explain. Some clients, like you said, if they're willing to work with me, we'll get it fixed. But most of the time, I have work papers that I just carry forward each year so I can get the tax return done. And I hate it, but what do you do?
Let me ask you this. As a small business owner here in this group, at the end of my year, when I send off my books off to my CPA, what questions should I be asking or about this issue? Should I say, what adjustments should I be making? What are you guys going to be showing on the tax return so that my bookkeepers can be up to date on that? How do I communicate that with the CPA?
Yep, 100%. Just ask them for the adjustments. Just say, can you send me the adjustments? That's
Straight
pretty much
up.
all you have to ask, straight up, and they should be able to give you literally a list of journal entries. Of course, with QuickBooks Online, there's no reason they shouldn't be able to go in there and post their own adjustments.
Right now, I'm trying to figure out whether that is, if I grant them that access and then have a huddle with my bookkeeper at the end and say, let's see what they did, or do I ask for their adjustments and do it ourselves?
It depends how much confidence you have in their understanding of the mechanics of QuickBooks Online, because this is why I love guys like Josh, because Josh knows the taxes, but he also knows the product. And quite frankly, there are a lot of CPAs and enrolled agents who all they do is taxes. They do taxes all day, all night long, and they're amazing at that, but they don't really get the mechanics of QuickBooks very well. And that's where you'll get a CPA or EA who goes in and makes an adjustment, for example, to an inventory account, and they're debiting or crediting the inventory asset directly and offsetting that to cost of goods sold. And they don't realize, because of the mechanics of QuickBooks, you can't ever do that. Any adjustments to inventory need to go through the product, services, or items so that it adjusts the quantities and values appropriately. So I end up frequently having to clean up those kinds of messes, not because the CPA or EA doesn't understand the accounting, they understand it very well, but because they don't understand the mechanics. And those are important little implications that they need to know. So it depends. So I had a client once who got mad at me because I invited his CPA, which was a guy with whom we've both had a long-term relationship. But the problem was that this particular CPA at the time had sold his practice to a very large firm, became a VP of taxation there, and this very large firm was outsourcing a lot of this kind of work to other countries where he didn't trust them because he had already seen problems that came up, and a lot of it was quite frankly based on barriers in communication, so that he said, I don't want them touching my books, they're going to make a mess. So then, Derek, going back to your question, if you're in that boat, then no, you don't want to give them access. Just have them give you the entries, and you can post the entries yourself, or you can get somebody like me or Josh or probably just about anybody else sitting here in this panel, can help you with, how to actually post those journal entries and make sure you get it right. And of course, the real test is after you post the entries, you run your balance sheet, compare that with the tax return, and everything should agree.
Right. All right. Thanks.
Yeah. So again, it just goes back to presumably anybody who's preparing taxes knows what they're doing on the accounting. The question is, do they know what they're doing when it comes to the mechanics of QuickBooks or QuickBooks Online? And that's the question mark that's important to understand, and where your comfort level is.
Can I interrupt for a minute?
Yeah.
Yeah. And, talking to your CPA or your EA tax professional, having them explain why they're adjusting it so you understand it, because if they don't understand QuickBooks, like Seth said, you need to figure out how you need to properly import it in QuickBooks, especially with inventory-based businesses. But for any reason, you should just understand what's going on, so that way it's correct and you don't have to deal with issues going forward, because they can come snowball and go out of control at a certain point. So
exactly. Thanks.
Yep, and the tax return should have depreciation schedules, so you should pretty easily be able to compare, for example, your fixed assets on your balance sheet with what that depreciation schedule shows. But you have to take the time to study the depreciation schedule so you understand what all the different columns mean, because you're going to see the original cost or the basis, and then you're going to see Section 179 depreciation that was taken, and you're going to see regular depreciation. So, and it's not that it's rocket science, you just need to take the time to go through it slowly and read the column headings and make sure, think it through, make sure it makes sense, that you understand exactly what you're looking at, so that when you look at the rightmost column on that schedule, you know what to compare that with on your balance sheet to make sure that you are in fact in agreement.
Make sure you get those depreciation schedules. I have tons of issues where I get a new client and the previous tax preparer won't give them to you. And so you're paying for that stuff. You're entitled to that information. So you should be getting them with your tax return.
Yeah. That's a good point. I have had a lot of, I've had a lot of frustration where I'll tell a client, go to your tax preparer and get your tax returns. And I'll assume that they'll understand that I need the whole tax return. But then the tax preparer is thinking, well, my client's a knucklehead, doesn't know anything about taxes. So they give you just the most basic forms and not the whole tax return. And then I have to go back and forth. Now I'm in a loop through the client with their CPA or enrolled agent, where I have to actually go back and explain, no, please. And sometimes what I'll do at that point, because I don't want to waste any more time, is I'll write up the email that I'll send to the client and say, just forward this to your CPA. This explains exactly what I need in sufficient detail, and they should get it. And please have them contact me directly if they have any questions. Because I think sometimes that's why they do it. They hesitate because they're afraid that they're going to give the client enough rope to hang themselves with, because they don't trust that the client is going to know what to do with the information.
And sometimes what I run into is the tax preparer won't give up that information because they don't want the client to take that to a new tax preparer.
Right, but like Josh pointed out, they don't have that right. The client paid for the information.
Yeah, anything you pay for, you're entitled to any work that a tax preparer, if they're licensed. If they're not licensed, they can pretty much almost do whatever they want.
Right.
Difference, so.
But the key is, and assuming they are licensed, because obviously you probably shouldn't have somebody who's not licensed doing this kind of work for you. But the real key is the work product belongs to the client. What belongs to the professional is their work papers. They don't have to give you their work papers like what we were talking about earlier. If they have work papers that explain book to tax differences, those kinds of things, those they don't necessarily have to turn over legally.
That depends on the state.
Oh, yeah? Okay. Yeah, because my understanding was the work product, which is the output, which is the return itself, definitely they have to give that over. but I guess it varies state to state in terms of the work papers. I was of the understanding that they didn't have to turn that over necessarily.
Well, if you
And then
pay your bill too, they have to give you back original documents, but they don't have to give you the work they did. You know, that's something to
got
consider.
it. Yeah, and then, look, let's face it. I mean, if they didn't pay their bill, that's a different story. But apart from that, you know, it's just a lousy way to part company with somebody. Like, just be cooperative. It's so much better, because in the end, what'll happen is they might leave you, but they might come back because they might realize what they missed if you do things classy, right? But if you act, frankly, shitty with people because you're angry that they're parting company with you, you're pretty much sealing the deal and making sure they never want to come back and work with you again or refer people to you. I've had clients leave me and still refer people to me because the reason they left me was they couldn't afford me or some other reason, or they just didn't, you know, they needed to scale down, whatever it happened to be. You know, so I found it pays off in spades to just always do things classy. You know, never retaliate just because somebody's quitting on you. They may have good reasons for it. They may be fighting battles you don't know about, right? So always do things with class. If you're in that position where they're parting company, of course, make sure your bills are all paid up, but then turn it all over. Give them everything they need. Make it easy for them. You know, like I always like to say, make them feel safe and comfortable, you know, that, hey, I'm not going to give you a hard time. I actually had a client a few years back who I was happy that they were going away, only because they were just in an industry that I really didn't want to deal with anymore. It was very complicated, and they found somebody who specialized in their industry and was going to take over the books. And I went out of my way to be cooperative and give them everything they need. I proactively followed up and said, do you have everything you need? Let me know if there's anything else. We can schedule a call. Because it can be disruptive, right? All of a sudden, this new accountant is pinging you every other day for more information. So what I do to kind of manage that, because one thing I always do is I protect my time fiercely, is I'll say, look, I can't do this on a one-off basis like this, but why don't you gather up the things you need and let's do a call on Friday or whatever it is, and then we'll go through and I'll make sure I get you everything you need by then. And then, you know, so basically I kind of nail them down on a process and say, look, I'm going to cooperate. I'm going to give you everything you need, but it's too disruptive in my schedule if I have to stop every 5 minutes to get you the next thing that you've asked for. So basically I take control of the process to protect my time, and then I schedule it with them. And I found that works really well. And this one client came back to me, wrote me a whole separate email specifically acknowledging, thanking me for making it so easy to make the transition happen. You know, because most people won't do that. Most people will get resentful about it, and then they'll act accordingly. So back to getting the book's tax return ready. So I explained the trial balance adjustment process. The other thing I wanted to talk about, though, is what I mentioned at the very beginning, which is, you know, I said if you're keeping the monthly books up on a month-to-month basis, then really year-end should just be a matter of taking care of December. It should just be another month that you have to do, with the added caveat that we have to hustle and get 1099s done and things like that, if it's January, if we're on a calendar year. So, of course, then the question becomes, what's the process for keeping the books up to date? Enter one more template that I sell that I've included with the same groups of people, 97 and up, and the recent Bulletproof bonus bookkeeping launch, is my Smart Sheet monthly checklist. And this was actually inspired from my audit days, and where we would have these very detailed audit checklists that we would go through. And one of the core components of the whole Bulletproof bookkeeping process was to kind of take that audit process and kind of evolve it over into something that would work in a bookkeeping context, right? There are things we do as auditors you could never do even if you wanted to, you know, when you're just trying to keep monthly books up to date. No, well, you really wouldn't want to, you know, and you never would. Like, you're not going to send confirmations for bank balances to their bank accounts. They would be like, who the hell are you? But I did, you know, but there's other ways to do the same kind of verification. We know the way to verify bank balances, of course, is to reconcile the books every month. So I took those kind of detailed audit checklist concepts that we used to use when I was an auditor and rolled it into a monthly checklist. And then I pivoted around the concept of, you know, auditors are just concerned with verifying the numbers. As a bookkeeper who's working with clients, there are other things that we want to consider each month, where if we're taking the time to go through these checklists that I ended up preparing, it's well beyond just verifying the numbers and going actually into a little bit of that advisory capacity, that elusive advisory capacity that we talk about. And I'll show you what I mean. And a few people actually who've gotten this template recently reached out to me and they said they were confused because they saw this, what you're seeing on my screen. Notice the current month lights up, right? We're in the month of May. Notice even though this is set to start based on January 1st, 2020, the first month we're looking at is actually December of the prior year, because in January, that's what we're working on, is closing out December, right? So that's why that's the starting point. And of course, what the people didn't realize right away who'd reached out to me and said, I don't understand how this works, is that this is all zipped up. So when you unzip the first level, we have the banking stuff, right? And this is just, you're going to reconcile the statements and you can list each and every different bank account, right? And just make sure, here's the date. I want to make sure these are reconciled based on the date the statement closes. If it's all on a calendar month, then maybe it'll all get reconciled on the 7th of the month, whatever that is, right? So you have the banking part. That's not that sexy or interesting. It's just the normal stuff we do, but we're laying it out in a format where we can go check off, when it's been completed. And I have an assigned to column, right? So going over to the right here, I can assign it to somebody. If I'm going to use Smartsheet as my project management tool, at least internally, then I can assign this to one of the bookkeepers that works with me. And then that person is going to be responsible for indicating the date that it was completed on. I could have done this as a checkbox, but I like having the date because then I can see context and I can look back and see historically, are we completing these very timely, or is it taking us a while? Having the date for when it was actually completed gives me that context. And then I provided a separate completed by column just in case for some reason it wasn't the assigned to person who completed it. Presumably it should usually, if not always, be the same. And then, of course, there's a column here for simple high-level comments, but if you're using Smartsheet, then hopefully you know by now that on any given row, you have a whole comments thread that you can use. So if there's a question, if there's a problem on something, you can have that conversation right here. It's in context, right? And to answer another question I got recently on this, yes, you would make a copy of this for each different client. Obviously, you can only use this once for any one client, right? And then each year you'd make a copy to update it for the following year. But here's where I think this gets interesting and forces us to think a little bit more, is because when I get, for example, the revenue and invoicing part, right, the question we want to ask ourselves, is there some way to check the revenues? Are there agreements to tie to, right? We can see if we know we have agreements with clients for monthly revenues, we can check copies of those agreements and make sure that we've gotten those amounts in from each of the clients. Now, I know this is asking a lot in terms of time and attention. Obviously, if you're going to go to this extent, you should be charging for it, right? This isn't something you do for a $250 a month client. You do this for a $750 or $1,000 a month client. Very, very thorough, because some of the other things you're going to look for is things like when we get down here to customers, are new customers coming in? We can analyze their sales and see, are we getting the same sales from the same customers every month? If it's a service-based business where it's largely driven by the clients who are paying the fees each month, we can look at that and then go back to our client with this information and say, hey, I noticed it's been a few months since we've taken on any new customers. Is this something we can take a look at together? Maybe now we can have that conversation about doing some forecasts, because if we can see that our sales line is flat, and the costs are variable, whatever they are, we can start to, like I've learned and then sort of fed back to everyone, the word client, Jay Abraham defines it as somebody who's under your protection. I'm protecting my client from a decline in their business by actually looking at this stuff with them while I'm doing the bookkeeping, while I'm analyzing the money that came in during the reconciliation process. I'm thinking, okay, the money that comes in hopefully is mostly, if not entirely, from sales from customers. Let's take a look at that. Let's dive into that area of the books a little more deeply and analyze it and see if there aren't new customers coming in, then maybe we should have that conversation with the client. Maybe we can work with them on a budget to say we need to devote some dollars to some kind of a marketing spend aimed at the effort of getting some new clients in. We can also have the conversation of, because there's 3 ways to increase sales. We can increase prices, which we don't necessarily want to do. It's not the first measure, right? But we can increase the number of customers, which, as I just said, it can be from advertising dollars. But also we can increase the number of times a customer buys from us. And that's a whole different conversation that we can have with our client and say, your business better than I do. I just want to get you thinking about this a little more. is, are there other options you can offer to existing customers that would increase the number of times or increase the average value of the order that they place with you, whatever that looks like, in order to help make sure that that sales line, that sales curve, is ultimately an upward trending one, right? That's what this checklist is designed to help you, to help your client start thinking about things in the bigger picture. It's not just about verifying the numbers now, it's about getting into that advisory capacity. And maybe what you do is you do this 1 or 2 months with the client without even really telling them that you're doing it, and then offer it to them as a more permanent service. Say, look, I can do this for you. It's not really part of what we originally agreed on. I just thought I would try it out and see how it went and see what you thought about this information I'm bringing to you. Because now it's like you're putting the product in their hands and letting them, touch it, play with it, whatever. And in that way, they're much more likely to get excited about and see the value in paying you extra money to continue to do this, right? So, like we say, the first one's always free. But then you look at things like this, collections, that's another lever we can pull to help improve cash flow, right? Are we collecting things fast enough? What's our accounts receivable turnover rate, right? And so I'm getting a little away from the idea of having the book's tax return ready, but more bigger picture into the process of how to use something like this to help manage the bookkeeping for the clients. Byproduct of this, the books will be bulletproof, no question. There's going to be no stone unturned when you're going through a process like this with your clients each and every month. And then I have the other major areas where you're going to go through the expenses and some key things like insurance premiums that maybe should get amortized, that maybe we're expensing and overstating our expenses in the month that they're paid and understating our expenses in all the other months in that premium period. So the idea is to get you thinking about this, and then to get you to get your client thinking about this. Like I said, the byproduct of a process that's as detailed as this is the books will be bulletproof, because if you go through this and make sure you check off every item on this checklist every month, a lot of times it's going to be, okay, not applicable, nothing to do here, but at least you took the time to put your attention on it and make sure that it's been addressed, taken care of, looked at every single month. I guarantee you, if you do this every single month with any given client, by the time you get to January, it's just going to be a matter of closing out December and doing your same normal process that you do every single month. And December is going to be good, right? So I feel strongly that if you use a process like this, it will, between that and the trial balance adjustment, these two major processes, or whatever your version of it might be, you don't have to use Smartsheet, you don't have to use this checklist, but use something like it that forces you to go through every area of the books line by line on a monthly basis. And the first few times you're going to do it, it's probably going to take more time because you haven't done it before, so there's going to be a lot more stuff to address. But what you'll find is once you get into the habit of doing this month in and month out, it gets pretty streamlined. And it will get down to where you might not actually have to spend more than about 15 minutes at the end of every month just quickly going through the checklist, making sure, but it'll put your attention on things so that if something does jump out, if you take a look at the sales curve and see that it's flat, it will force you to take a look and schedule, the time to have that conversation with the client. And they will love you for it, because I can almost guarantee you, if you start doing this with any of your existing clients, they will turn around and say to you, nobody's ever done this for me before. Almost guaranteed you'll get that reaction and response from them, because probably nobody has. Biggest complaint I hear from business owners is that their accountants don't do this kind of stuff for them. Because they don't understand what Joshua was what we were discussing with Joshua a few minutes ago. They don't understand that the people they pay to do their taxes are only being paid to do their taxes, and they don't have the time to go beyond that. But they don't understand that, so now they get frustrated and resentful, saying, well, he just did my tax returns, he knows what my books look like, why can't he give me some advice? And the answer is, he can, but offer to pay for it, right? Don't be cheap. These guys are busy. They're up to their eyeballs. Offer to pay for it. But the other side of that is you can offer to do it for them for an extra fee, right? And I half jokingly will say to people, you can double your rates and lose half your clients, make the same amount of money doing half the work. And then a lot of what that work looks like is much more interesting. It's not compliance work like we were talking about a lot this week in 97 and up. It's not compliance work, it's the advisory work, which is frankly much more interesting, much higher value. You can charge a lot more for it. So it's more fun, less time, and more money. You couldn't have a better win-win-win on anything in terms of doing work in our industry than making that shift from compliance to advisory by focusing on exactly these things, right? And then if you can get these clients to get excited about what you can do by applying a process like this that's this detailed, then you'll be able to charge them enough to make enough money that you can hire somebody else to do the compliance bookkeeping work while you get to focus on the more fun, more interesting, more valuable advisory stuff. So to me, if you take both of these pieces that I've laid out for you this morning, the trial balance adjustment, and like I said at the beginning, do it every year, even if it's been your client for years, just to be sure. If you're that good, then it shouldn't take more than a minute to confirm that everything's still in agreement, right? And if you find that there's been a mistake, you'll identify it and you'll fix it very quickly. And then you'll have books that are completely tax return ready. Between that and the monthly checklist that you go through to make sure that no stone is unturned, I think you'll have really good bulletproof books, and you'll have CPAs and enrolled agents who will be so happy with what you're turning over to them that they can't help but think of you the next time they get a set of books that's a mess, and they think, oh, you know what? This other bookkeeper who works on this other client of mine always turns in like super solid, clean books. I'm gonna see, maybe I need to put them in touch, right? In other words, you're gonna get the referrals, and you don't have to even ask for them. It's gonna be, what do they call it? It's gonna be a program of attraction rather than promotion, right? Because the books you turn in are gonna be attractive to the ones who are preparing the tax returns. So you're the one they're gonna think of when they have another client whose books are a mess, that they're like, they need help. I'm going to call this one because this one seems to really know what they're doing, So that's the moral of the story at the end of the day. And I've missed all the exciting stuff in the chat. So that's about all I had on this subject for today, though. But if anybody wants to chime in now, ask questions, now is the time. Speak or forever hold your peace.
If you also send tax preparer the P&L balance sheet and a detailed report of the assets so they know what assets were purchased during the year, they'll love you, because then they can figure out what to depreciate them at, and you'll definitely get referrals. Because I won't touch cleanup work. I'll do books, but if a bookkeeper has all the reports pretty much hand to me, I would totally use them over and over again.
Yep.
I don't know if I missed this, but when you have a file, where do I have access to the file that you're using when you share your screen?
Where do you have, what do you mean?
The file that you went over today?
So those are both templates that I sell.
Oh, okay.
So they're sold on my website. They're also included for people who are in 97 and up. And when the people who signed up for the recent Bulletproof Bookkeeping bonus launch that I did also got these included, because it's such a critical part of what we're going to be doing over the next 6 weeks or so.
Okay, so the Friday webinars are kind of affiliated with the 97 and up.
Not directly. I mean, the Friday webinars I've been doing since way before 97 and up. I've been doing this since Google Hangouts was in beta. So this is just, something I do to share information for fun and for free. But every once in a while, like today, I'll have templates that I'll refer to that I do offer for sale.
Hey, Seth, is there a method in the webinar calendars to register for each one of these and to get reminders? I didn't see it. I'm a member of the Bulletproof Bookkeeping, but I just didn't see a way to sign up for these or to get notifications.
Yes, I'll show you exactly where to go. And I was sending out emails weekly for the Friday Zooms, and then I kind of stopped. But I might do those again. I might just send them to the main list that I have. But if you go,
you have to go in on a weekly basis and register for each week individually. There's not like a one place where we can sign up for every Friday.
No, but I think what Derek was asking is where to go to actually register for these, which is here on the events page on my website.
I was just going to share that.
Yeah,
I found that it's beneficial to me to actually put a weekly task in my to-do list.
That's what I've done.
Actually, go ahead and check this page for any new any new entries.
But what I wanted to do is go into this, which Seth is showing us, and kind of peruse it and go, oh, I like that one. Oh, that one's interesting, and then sign up right there. I didn't see that.
Yeah,
where
you
you're
can. So let's say you're going to sign up for today's. You see how I'm on today's webinar?
Right.
When you click on this, it expands, and there's the registration link.
For whatever reason, I fell down on that one. I'll double check.
Yep. Yep, and I just created another version of the calendar because I've learned over the years that different people like some are more visual, some are less visual. So you also have it here in an actual calendar layout. So you can see like there's today's, you can click on next week's. And again, you'll have the registration link down here in the live event URL. And after the fact, if you can actually go back to these and you'll have the URL here that takes you to where I end up posting it on the website once it's done. So
I'm wondering if I've noticed there are different versions of your site depending on how I search. So this new .nerd enterprises is definitely where I want to see.
Yeah, I mean, even now, if you go to the original one, which is just at nerdenterprises.com, right on the home page, it kind of tells you to go over to the new one.
It'll move me there. All right, cool.
Yeah, so that should take you straight over to this one. It's a long story. I'm just keeping the old site there because there's a lot of content that's accumulated over many years that gives me a lot of good SEO value. And and they're blog posts and things that people find when they do searches on Google that I don't want to take down because I'll lose a lot of valuable traffic that way. So I left it up there and then just carved out the subdomain of new.nerdenterprises.com, which is where all the courses are, all the new stuff going forward is, and certainly where you can go register for the live events. Going back to what I think Greg was saying is, yes, I could make one recurring webinar for every Friday that you could just register once and get to them all. But there's a couple reasons why I don't do it that way. The main of which is, sometimes I don't do a webinar on Friday. I take the week off. It's rare, but it happens. Also, because I want to be able to individually schedule different topics. Otherwise, what happens when you register for that recurring one, you get on the notification hit list for every single week, no matter what. Right? So this way, and also, and quite frankly, from a marketing standpoint, I want the tracking. I want to know who's signing up for what topics, and I can track that data when I do them separately. I can see, because I see the confirmations that come into my inbox when you all register. So I start to get a feel, even somewhat organically, for certain people who register for certain topics, and then there are people who are here every week, no matter what it is.
Got it. Perfect.
So some of it is, frankly, selfishly motivated. So, Matthew, did we lose Matthew?
Yeah, Matt left a little while
okay. I just noticed his comments in the chat. He says, now you can use IFS function. I don't know what that means.
It's an Excel function. If I recall, I've used it before. It's like if multiple ifs.
It's another way of doing a nested if-then statement?
I believe so. I've had to use it only one time that I remember.
Okay. I'll have to ask him about that. That sounds interesting. Jessica says, I prefer when the accountant gives me the AJEs. Otherwise, they mess with AP, AR, et cetera. That's the other thing is, they want a debit and credit accounts receivable, but they forget that there has to be a customer associated with that. So a lot of times I do those as temporary reversing adjustments, and I'll create a customer called accounting AJE as a customer, and I'll create a vendor for the AP one that's called AP AJE for the vendor. So I do those entries just to get the balance sheet to agree to the tax return. Reverse them because in the bigger picture, I need to go through the AR and AP with the client if something's off and say, what out of this needs to be marked paid, and if it's paid and we've reconciled it and it's bulletproof, meaning we haven't missed anything, then that means we've doubled up something somewhere, right? It means I took in a payment from a customer and probably booked it straight to income instead of marking it as a payment on a receivable. Now I've doubled my income on that, and I've also overstated my receivables. So there's a process for how we have to fix those things, and it can't be fixed with a journal entry, So we'll do the journal entry for a minute to get things to agree. The other question I'd often have for the tax preparing professional on something like that is, where did you get this number from? That's when I do want to see the work paper. What made you decide accounts receivable wasn't right when we have an accounts receivable report that shows by client what's owed by whom? A lot of times it's because they're trying to get from accrual to cash. And even the cash basis financials show a receivable, and that's a whole other conversation why that happens. But so they're just trying to zero out what's showing up in accounts receivable because they're trying to say cash basis. There should be no accounts receivable. So again, we have to do the entry just for a minute to get it into agreement and then reverse it. And then we're back to relying on our AR aging, which properly will show us customer by customer exactly who owes what. And that's what we have to review with the clients. That's part of that checklist we're going to do each month is review that aging with the client and say, is there anybody on here who shouldn't be? And for that matter, and almost more, well, not more importantly, but harder to figure out is there anybody missing from this list? Is there anybody who owes us money who's not on this list? Which goes back to verifying things like contracts to see, is there money we should have received from somebody that we should have invoiced for according to their contract that's not here? That's the way you can catch things like that. That's how you can catch missing receivables and related missing income from a set of financial statements. So, you know, you can do the minimum amount and charge $250 a month, or you can do stuff like this and charge $1,000, $1,500 a month. It's up to you, right? So that's my story, and I'm sticking to it. I'll have to, hopefully Fred Stein will get to see this, and he'll agree with everything I said. Because he's the reason we're talking about this subject today. He had kind of written into me saying, I would love to see something that teaches people how to get the book's tax return ready. So that's my story, and I'm sticking to it. All right, I'm going to cut it off here, and we'll see you all next week. We got the Wednesday webinars. We got the Friday webinars. All kinds of fun stuff going on all week, every week.
Thanks, Seth.
You got it.
Thanks. Bye.
Yeah, bye. Thank you.